You don't need to be making $100,000 per year at your job to become a millionaire. In fact, that's the hardest way to do it. Let's talk about how to make your first $1 million. I'm Matt, and welcome to PB Trading University Light Class 29. There are three main ways that people become rich besides being born into it. They create a product to sell, they provide a service they can sell, or they learn a skill set that can generate them a massive amount of income, such as trading, investing, singing, or even a sport. Unfortunately, we are told the rich stay rich and the poor stay poor. We are told it takes money to make money. Some people believe it and they get stuck in the cycle of the traditional life, working 9 to 5, striving to increase their income at their job so they can raise their lifestyle, only to end up paying taxes and having to work even more, and repeating that cycle over and over until they are old and gray. Society glorifies this process because it helps keep the rich richer. After all, it takes money to make money, right? Well, not exactly. The rich stay rich because they have the funds available to buy real estate properties, invest in the stock market, and start their own businesses. However, they also have an abundance of another very important asset that helps them stay rich: time. You are currently not rich because of two reasons. You don't have enough money to make more money, or you don't have enough time to make more money. We're going to talk about how to fix that in a little bit, but first let's talk about sources of income. You might be thinking, why is this important for traders like yourself taking our trading university courses? Well, most people don't want to learn to trade just for fun. They do it because they want to make money. That being said, the term full-time trader is misleading because most successful full-time traders who have a lot of money aren't using their trading as their only source of income. That's because most successful traders understand the importance of diversification, not just within their stock portfolio, but also with their overall income. That's why this saying goes, the average millionaire has 7 streams of income. The first is earned income. This is income that comes from your job or employment. For most people, that's the paycheck or salary that they rely on. Earned income is usually considered a foundation as it is reliable. However, it often has limits in terms of earning potential. Only 20% of traditional jobs make more than $100,000 per year. Next is profit income. This is your side hustles, gigs, business ventures, and anything that entails leveraging your talents, skills, and network to create additional income streams. This type of income has a potential for huge growth and can be done through entrepreneurship, freelancing, content creation, or part-time businesses. Next up is capital gains income. This is earned through the sale of assets such as stocks, mutual funds, crypto, commodity trading, forex, or even NFTs, as well as collectibles such as art, antiques, and precious metals. Also, real estate flipping and gains from sales of real estate investments can be classified as capital gains income. This has high reward potential, however high risk potential as well, especially without the proper education. It is important to understand how taxes work when it comes to trading these assets so that you can make sure you are getting the most bang for your buck, or at least keeping it from Uncle Sam. The next form of income is interest income. This is generated from saving accounts or short-term bank deposit products that have fixed interest rates. Interest income comes with a high level of security because the standard deposit insurance coverage limit is $250,000 per depositor per the FDIC. So if something were to happen to your bank, like what happened to First Republic or Silicon Valley Bank, then you will still be insured up to that $250,000. That being said, most major banks don't end up failing the way those other two did, which is why savings account and interest income are considered relatively safe and secure. However, the rates that banks offer are typically super low in general, sometimes even lower than the inflation rate, which means your money may actually lose value over time. Next is dividend income. These are earned when you invest in dividend yielding assets such as mutual funds, business ownerships, real estate investment trusts, REITs, and most popularly dividend paying stocks. This can provide a consistent and passive form of income if done right. Dividends for stocks is a share of the profits distributed by a company to its shareholders. So think of it as companies giving some of their leftover profits to investors who are loyal to their stock. Dividends typically get paid out every quarter, meaning every 3 months. Some companies do it once per year, and some even do it once per month. The dividend date is a date the dividend is paid out to holders of the stock. In order to be eligible for dividends by the dividend date, you have to have held the stock before the ex-dividend date, which is the cutoff date to be eligible for dividends from that company. This prevents people from buying a stock right before the dividend date just to collect the dividend and immediately sell the stock. The ex-dividend date ensures people who have held the stock are the ones that get the dividend. For example, Ford pays out 15 cents every quarter for every 1 share you own at or before the ex-dividend date. So if you buy 10,000 shares of Ford at $10 per share, making a total investment of $100,000, that means that every quarter you'll get paid $1,500 just for holding the stock. That's $6,000 per year. The national average APY for traditional bank savings accounts is currently 0.58%. So if you put $100,000 into a savings account, you're looking at a yearly return of $580. So $6,000 in dividends versus $580 in savings, both for just parking your money somewhere. Now, that being said, your $100,000 investment in your savings account is safe and insured. Your $100,000 investment in Ford won't be due to market fluctuations. If Ford goes bankrupt, you can lose a big chunk, if not all, of that $100,000 investment. If Ford's stock goes down in value over time and you end up having to sell it, you can also lose a portion of your initial investment. That being said, your loss will be cushioned or made obsolete by the dividends that you received for that stock. For reference, Ford went up around 11% in the past 5 years. So let's just pretend Ford goes down 10% the next 5 years. 10% of $100,000 is a $10,000 loss. However, during those 5 years, you collected $30,000 in dividends. If Ford's stock goes up in price over time and you end up selling it, not only did you collect the dividends, but also the profit from the investment. It's important to do research into the dividend-paying stocks that you're investing into for the dividends, both to make sure it's a viable long-term company and to check the dividend payout details. You also want to have a solid investing plan and overall portfolio plan in place for this type of income. Next up is rental estate income. This is owning properties and either leasing or renting them out to tenants. This has a huge amount of upside potential, however requires a lot of capital for the initial investment and can be risky, especially due to the different laws in place that protect tenants. Next is royalty income. This is the least common form of income as it requires having a certain skill set. This is earned through licensing music, photography, written content, and other works for commercial use. These might not be significant initially, but mass production and use of the content can lead to a steady and passive stream of income. So let's break down these 7 types of income. You have your earned income, which is your job. This is your main way of making money, typically speaking, especially initially. Now remember what we said before. People get stuck in the cycle of focusing solely on increasing their earned income from their job to raise their lifestyle, only to end up paying taxes and then having to work even more. People think if they continue that lifestyle, they'll eventually make it. Now here's the deal. According to studies by Dave Ramsey, only 31% of millionaires averaged over $100,000 a year over the course of their career with their earned income. 30% never made 6 figures in any single working career. Only 15% held senior leadership roles. What this tells us is the majority of millionaires didn't make their money from a traditional 9-to-5 job. There's a reason for that. On average, Americans save approximately 7 to 8% of their after-tax income per year. So if someone making $100,000 with their earned income saved 20% per year, which is $20,000, it would take them 50 years to become a millionaire on their earned income alone. So before we go any further, we need to talk about step 1 of becoming a millionaire, which is learning how to properly spend money. In the study mentioned earlier, 94% of 10,000 millionaires reveal that they live on less than they make, which proves that careful spending is crucial in getting that millionaire status and keeping it. 75% of millionaires in that study said they never carried a credit card balance in their lives, citing the keys to create a budget and stick to it. Kind of like for traders with their trading plan. 93% of millionaires in the study said they use coupons while shopping, which billionaire Warren Buffett has said he still does. So step 1 is learning how to properly spend your money, and step 2 to becoming a millionaire is learning how to properly earn interest on your money and invest. Like we said before, it would take a person making $100,000 per year around 50 years to become a millionaire on their earned income alone. Well, as we know, there are 2 things everyone needs to become a millionaire: time or money. So if you make a lot of money with your earned income and you're able to properly earn interest on that money and invest it, you can turn your money into a lot more money. In theory, your money is working for you. That's the beauty of passive income. You're earning money without spending time. So instead of putting yourself to work to get money, you're putting your money to work. This is where dividend income and interest income come into play. Already went over how that works and the benefits of each. Long-term investing falls under the capital gains income category and is super important. In the study mentioned earlier, 75% of millionaires said that regular, consistent investing over a long period of time was the reason for the success. I know people think that most millionaires are people who found a tech app or some type of diamond in the rough company or inherited it. However, that's the exception, not the norm. 79% of the millionaires in the study said that they didn't have an inheritance. Only 3% had an inheritance of over $1 million. Another way to make your money work for you is rental income. By buying real estate properties and leasing or renting them out to tenants, you're also putting your money to work. Your initial investment is the real estate property, and your passive income is the rent you get every month from your tenants. Now you might be thinking, what if your earned income, meaning your job, doesn't make you enough money to be able to have your money work for you to the point where you can get to that millionaire status? For instance, what if you can't afford to buy extra real estate properties? What if you aren't able to invest enough to get a substantial dividend payment? Well, once again, in order to become a millionaire, you need 2 things: time or money. So if you don't have the money, then make the time. Negative attitudes and bad spending habits are the 2 biggest roadblocks to reaching the millionaire status. The activities that you do on a day-to-day basis affect your overall quality of life. Most people end up spending 80% of their time on their traditional jobs and 20% 20% doing what they enjoy doing. People who dislike their jobs usually use that 20% to do activities that make them feel good in the moment, since they are spending the 80% unhappy. These activities could consist of scrolling on TikTok, binge watching Netflix, or other activities like that. This is known as the broke mindset. We want to develop a millionaire mindset. This leads us to step 3, making fuck you money, also known as the hustle. Like we said before, someone making $100,000 per year would take around 50 years of saving to become a millionaire. Even with dividends and interest, it would take someone a very long time to get that millionaire status from their earned income alone, unless you're a top-of-the-line surgeon, physician specialist, dentist, lawyer, or the CEO of a major company. If you aren't one of those at the top of your field, then chances are you're going to need to look towards profit income, which is side hustles in entrepreneurship, royalty income, collecting royalties as an artist, or capital gains income, trading and investing, to become a millionaire. Like we said before, the broke mindset is using your spare time in unproductive ways. So how can we use that spare time to become a millionaire? We do this by building skills. The traditional education system and traditional jobs teach us how to follow rules. That way, we can be replaceable. The one way to become truly recession-proof is to develop skills. This is how you get your profit income, royalty income, or capital gains income. These incomes are what fund the dividend income that creates millionaires. But these skills don't come easy. If they did, everyone would be a millionaire. It takes time, it takes education, it takes effort, it takes a little bit of luck, and it takes a little bit of good timing. Using that 20% of your time that we were talking about before to build these incomes or develop skills that can help you build these incomes is key. So if you're an artist or musician looking to earn royalty income, that means practicing your craft, networking in your niche, and trying to grow your brand. If you're an entrepreneur looking to earn profit income, that means building a product or providing a service and finding ways to sell it, such as making content about it, finding leads, and expanding your reach. If you are a trader or investor looking to earn capital gains income, that means educating yourself about trading, studying charts or fundamentals, and tracking your trades. Consistency is what will help you find success in these 3 areas of income. I'll say it again. Royalty income, profit income, and/or capital gains income mixed with dividend income is what makes millionaires. This is how you break yourself out of the traditional cycle of getting a loan, going to college, getting a degree, getting a job, paying off the loan, climbing the ladder, and retiring at 65. It's like a human factory, but it works. However, in this day and age, people are discovering there are better ways. Stuart W. Arbach, an author and business executive, once said, "In a world drowning in information, ignorance is a choice. People have no problem spending money on college, but then after they graduate, they have issues spending money on learning. This is due to a few reasons. They get comfortable with their current knowledge and paycheck and think, why should I learn more when I'm already making money? They worry there is too much risk involved and think, how do I know it will be worth it and I'll get my money back? Or they choose to be ignorant of opportunities and think, why learn a new skill when I just spent 4 years in college? That is not how the millionaire mindset works. That's how a fearful and broke mindset works. Stop thinking about how much something costs and start thinking about ROI, return on investment. Remember, capital gains income, trading and investing, profit income, entrepreneurship, and royalty income, collecting royalties as an artist, all require developing skills. Those skills are what generates you money, and in turn gets you to the millionaire status if done right. That's why we deal in ROI and not cost. Just like in trading, we buy stocks because we think we can make a return on that investment. For example, you might buy a $150 stock, hoping for a 50% return in 2 months, $75 profit. That's considered a good investment. For this same reason, investing in the proper education and mentors is worth it. For example, investing in a $150 trading education service that can teach you how to make well over $150 is a good return on investment. This goes for traders looking for capital gains income, artists looking for royalty incomes, or entrepreneurs looking for profit income. Stacking skill sets is the key to becoming a millionaire, whether it's learning how to properly read a chart, learning how to properly start a company, or learning proper breath control when singing. Just like with college, the easiest and best way to learn these skills is to pay someone who's already mastered them to teach you, aka a mentor. Let's think of it in traditional terms. Someone is making $10 per hour, and they have the chance to make $25 per hour, but it requires taking a $500 training class. You would think it would be a no-brainer to take the class and start making more money. After all, with the $15 per hour pay bump, the return on investment is worth it, as it will take 34 hours, less than a week's worth, to make that $500 back with the extra $15 per hour you're making. But most people are afraid to take the risk of spending time and money taking that class, because trying something new takes effort. It's uncomfortable, and it can be scary. Spending money and committing to singing lessons because you want to make royalty income is scary. Spending money on entrepreneurship mentors is scary. Spending money on trading education is scary. Because once you learn something, the next step is doing it, and that can be scary. Becoming a millionaire isn't easy. It means taking these risks. It means trying. The doer always has the advantage. Reduce the amount of time being spent scrolling on social media, Netflix, or just lounging about, and take actions to becoming a millionaire. Learn to take baby steps at first so it isn't overwhelming. going. Start by learning one skill and start executing and truly understanding it before moving on to the next. For trading, that might mean learning about trading psychology first, then a trading plan, then charting, then fundamentals, one step at a time, instead of trying to overload your brain all at once with all the information. Just like with working out, how we work arms one day, legs the next, chest another day. And here's the deal. If you don't have money to invest in yourself, you still have time that you can invest. Not all education is under a paywall. There's a ton of great free education out there, especially on social media and Discords. Remember, in order to make $1 million in 1 year, that means making $3,000 per day. That might seem like a lot at first for a trader, but with compounding gains, proper trading education, and a solid dividend plan, that $30 per day can turn to $300 per day and eventually $3,000 per day. That being said, the fastest and most popular way to get that millionaire status is to have both capital gains and profit income. That's why most full-time traders are also entrepreneurs. Being an entrepreneur isn't an impossible task. It's all about finding one problem and providing a solution for it that you can sell as either a product or service. You don't need a degree, you don't need office space, you don't need a bunch of money. People face problems on a daily basis and are just looking for solutions. They don't care about your degree, team, or how much money you have. They only care about what your solution can do for them. Making $3,000 per day means selling a $3,000 product once per day, a $1,000 product 3 times per day, $500 product 6 times per day, or a $100 product 30 times per day. So if you sell a $3,000 product and 1 out of 30 people you cold call buy your product, that means you have to reach out to 30 people per day. If you sell a $500 product and 6 out of 150 people you cold call buy your product, you need to reach out to 150 people per day. If you sell a $100 product and 30 out of 500 people buy your product, that means you have to reach out to 500 people per day. It might be hard work, but you can't just expect to become a millionaire by not putting in work. When you're a stock trader, you are your own boss. The same goes for being an entrepreneur, as well as an investor. There are a lot of parallels between stock trading and investing in entrepreneurship, which is why it's not surprising that most successful stock traders also become successful entrepreneurs, and the other way around. Traders and entrepreneurs both want the same thing: to stop relying on the 9-to-5 lifestyle of working for somebody else for a fraction of what they make. Next class, we'll be going more into depth into the entrepreneur mindset and talk about a $100,000 in 100 days entrepreneurship challenge and how to get there successfully. If you are ready to invest in yourself and your trading, I will leave the links to our premium education and alerts in the description of this video. If you don't have the capital for that but have time, be sure to check out our 100+ free education classes on the Discord. I hope to see you there, but until then, I hope that you all make some bread.